Hello, welcome to another new topic. So today we are going to be talking on currency pairs. We are going to look at some vital topics today. The first thing is what is currency pair. The second one is how to read Forex quote. The third one is major, minor, exotic currencies. So you need to understand what a major currency is, what a minor currency is, and what exotic currencies are. We are going to know basic Forex trading acronyms, like basic normal small language Forex traders usually use. And you're also going to get the last one, which is what pair should we trade. I'm going to recommend pairs you will focus on as a beginner as you are actually getting into your trading, pairs which you can actually focus on and start your trading journey with. What is a currency pair? The first thing, as a trader, you cannot trade when you don't even know a currency pair, because before you want to perform a trade, the first thing you need to do is to select a currency pair which you want to perform that trade on before entering into the market. So knowing currency pairs is very important. And what is actually that currency pair? So currency pair is the quotation of two different currencies with values of one currency being quoted against another, which means in the forex market you cannot trade a single currency on its own. For you to trade, you need to trade two currencies which has been paired together, one being the base, another one being quoted against another one. When you join two currencies together, the first currency is what we call the base currency, and the second currency is what we call the quote currency. So individual currency do not have absolute value. So let's actually look at some examples of pair. Let's look at an example of Australian US dollar. So Australian dollar US dollar is simply you merging two pairs together. Like you take Australia and you merge with US dollar. They call it Australian US dollar. Now, if you are bullish on Australian US dollar, bullish simply means long. That is why I was saying that we are going to discuss some acronyms, which are basic terminologies. Like if you want to say long, you say is buy. Short is sell. Bullish means going up. Bearish means going down. Just think of it as a bull. When a bull wants to attack, it goes with a horn and it push up. That is take you up now and like this. Why a bear? When a bear is attacking, is pushing it but down. So that's where that is being derived. Ranging means moving from floor to ceiling. That's what we mean by range. Those are some small terminologies you need to know as of this level. We are going to be seeing more terminologies when we get to the next level and when we even get to the level of technical analysis. So those are some terminologies. Some terminologies you will come across are like NFP, CPI, which are actually news being released, big economic news being released. When we'll be talking about that one, we're also going to mention everything on that aspect. So now, if you go long on Australia, the US dollar, it simply means that what? You're actually buying Australian dollar against dollar. If you are buying this pair, it means that what? You are buying Australian dollar against the US dollar. And if you go short on Australian US dollar, it simply means that what? You are selling US dollar against the Australian dollar. So you're anticipating that what? The value of dollar should rise, while the one of Australian dollar should sell if you actually sell it. So the base currency is always going up, while the quote currency is actually going down. So basically, they have made it in a way that it will be very easy for us as traders to trade currency. You don't necessarily need to go and maybe get a pair from another place, struggle to merge it by yourself before performing a trade. Our broker has made it very easy. With just a click of a button, you can quickly buy Australian dollar against US dollar or quickly sell US dollar against Australian dollar with just a click of a button. So our broker have made everything easy. You don't need to go and find where Australian dollar is and you find where US dollar is. You come and you merge them together before performing a trade. Everything has been made very simple. With just a click of a button, you can either sell any of them if you anticipate that the price is going to drop, or you buy it if you anticipate that the Australian dollar price is going to rise. So after looking at how you can simultaneously buy and sell currencies, let's actually look at Forex quote. So the Forex quote is actually being listed in number format, and that number format is actually the money. For example, you will see GBP/US dollar, where GBP is the base currency and the US dollar is the quote currency. So it means that for every £1 is equals to 1.035 US dollar for £1, which means that is the current market price itself. That is the current market price which we have choose. This market price is in dollar format. it is actually in dollar format, and that is why I listed it up there, which means for £1 it is equals 1.3035 US dollar, which simply means that what, if you are living in England and you travel to the United States and you want to change your £1, that your £1 will be valued at $1.3, which simply means if you have £100, you are going to end up having at least a minimum of $130, and you always want to buy low when you are anticipating that what the price is going to rise, and you sell when you know that the price is going to low. And if you are buying low, you are basically buying the US dollar in anticipation that what, when it rises, you sell back that order into the market to generate profit. That is how you do in the forex market. You buy a certain amount of currency, you hold that currency for that value to rise, and then you sell it back into the market to generate profit. So the market is like a zero-sum game. There's no somebody or a capital where, like for example, where we were seeing in the decentralized market where they have a central exchange. The forex market is actually decentralized, so there's no money anywhere that you need to see somebody, when you hit a profit, somebody will pay you. You can only sell back your profit into the market to generate money for yourself. So when you buy the GBP US dollar, when it rises into profit, you will now sell back the profit into the market, and you will make money. The same as if you sell GBP US dollar, when it goes into profit, you will now buy back that your order into the market to generate profit. That's how it actually works. If you look at the introduction to Forex, or what is Forex video, I actually mentioned the major currencies. We are still going to look at them here, and we're also going to talk about the most traded currencies. So these are the 8 major currencies. We have the United States dollar being quoted as USD, we have the euro, we have the Japanese yen. So one thing which you have to know is that the US stands for the country and the dollar stands for the currency. EU stands for the European countries, and the R stands for the currency. The same as JP. JP stands for Japan. Yen, Y now stands for the currency, which is yen. GBP stands for Great Britain. P stands for the pound, which is the currency, and the list goes on. And that is how it is. These are the major currencies being traded. That's why I was saying that if you want to join Forex, or if you are into Forex trading, you should focus more on trading the major currencies. But basically, when we talked of major and minor currencies in the Forex market, there are a total of about 28 different currencies. If you use these ones and join them together, like you take euro and US dollar, Japanese yen, Australian, Japanese, or if you just merge everything together, you're going to end up having at least 28 different currencies. So these other 28 different currencies, only the ones that have US dollar are being called the major currencies, while the ones that are actually without US dollar, we refer to them as the minor currencies. So you might have heard me saying that exotic currencies are, and I haven't talked anything about exotic currencies. Exotic currencies are basically currencies that are not mostly traded. They are not even among the 28 currency pairs being exchanged in the Forex market. Remember, we said the 8 major currencies provide the highest volume. The minor currencies, the minor currencies are now added to that one to make up the 28 currencies. They provide volume, but not as volatile as the one of the major currencies, which means that spread are going to be slightly higher than that of the major currencies. So for exotic currencies, they are actually currencies that are not mostly traded. They are not frequently traded, and they are less liquid and typically associated with emerging and developing countries. So there are countries like currencies of our country. If you want to trade US dollar ZAV, or US dollar Naira, or US dollar Ghana cedis, or US dollar South African Rand, or some types of currencies like that. Okay, so we refer to those currencies now as exotic, as they cannot provide high volume. They cannot provide high volume. They are less traded, which means the spread are very, very big. And when the spread is big, the transaction cost is going to be very, very big. So you have to pay a lot of commission for you to be able to perform a transaction on that particular country currencies. You need to know what pair you have to be trading, and it is very, very important for you to know that. If you want extraordinary results in trading, you need to actually narrow your focus. You don't need to focus on so many things. When I say 28 currency pairs, don't say, I'm going to make a lot of money because I have an opportunity to trade a lot of assets. No, that is not how it works. You have to narrow your focus. The market itself is so large, is so big in a way that if you don't narrow your focus, it is actually going to make things difficult. You are just going to be moving around, making money, losing money, making money, losing money, either standing in one position without making any progress. So if you narrow your focus, follow only what we're going to teach you, ignore the lifestyle you see on social media, because it is actually, you are actually going to be seeing it and thinking that it's a motivation for you to get there, but actually it is not. For you to be motivated, you have to study everything we're going to be showing you throughout this program, so that it can actually help you somehow, at least, to take a bold step towards achieving consistency and profitability, because the lifestyle had nothing to do with you succeeding with your trading, but the education is going to help you to become successful. So ignore all the lifestyle you see on social media, or you scroll on Instagram seeing how people are showing lavish car and all types of things. I'm not against that. That's their own way of spreading their wealth, but the real thing is that if you are really determined, then you don't have to focus on all those things. Narrow your focus, and you have to trade few currencies. And what are the few currencies? You have to trade these few currencies I'm going to recommend, which are Euro US dollar, GBP US dollar Canadian dollar, Australian US dollar, and US dollar Japanese yen, because they tend to produce high volume in the market, and they are very, very liquid, which means the transaction cost there is going to be very low. You don't have to pay a lot of money to perform a transaction. So unlike other currencies, like other minor currencies and other exotic currencies, where you have to pay a huge transaction cost for you to perform a transaction. So narrow your focus. Inside this one, you might not trade all the 5. You can decide to pick 3. You can decide to trade all the 5. There's no problem. You can decide to trade 4, 2, or 1, depending on you. For those who also like gold, maybe if you can focus on gold, XAU, US dollar. I'm not really mentioning that much because it's not a currency pair. It's actually a metal. So it is different from currencies. It falls under commodities. So this is actually how you can do to succeed. Ignore everything you see on social media, as it's not actually going to help you anyway. Focus and follow those whom you know that you really want to, they can really give you that knowledge to succeed. And that is the only way you can do to actually live the life you deserve with your trading.